Hello everyone, how's it going? In this video, we're going to talk about Palantir's upcoming Q2 shareholders meeting and the consequences that it may have on the stock, and also some tips and also recommendations on what you can do in the meantime. Now, before the video starts, if you like my content, please like, comment, and subscribe to my channel, and to take a look at the equipment links that I posted in the description. Any purchase made through those links will yield me a small commission from Amazon. So, thank you for your continued support, and let's begin with today's topic. Overall, Palantir's Q2 earnings have become the center of the attention, given the recent market volatilities and the stock's very impressive run. As the company achieves profitability or achieved during the past quarter, investors are now very curious to see the results of the upcoming quarter. So we're going to talk about the key factors that's going to influence Palantir's Q2 earnings and their potential implications for the stock price. We'll also address the significant negative aspect that could leave investors, very uncertain and maybe wanting to unload their position. The ongoing earnings season has been very full of surprises, with mega cap stocks experiencing movements that are usually associated with smaller caps. There were a lot of earnings surprises that have sparkled both bullish and bearish responses, making the stock market overall less predictable than how things were before. It's very important to understand that stocks are, or can be highly manipulated by our fear and greed during earnings season, making it very challenging to predict the short-term outcomes accurately. So, regardless of what people say, and that includes myself, a very prudent approach should be applied here, regardless of what you hear and what you read. So Palantir seems to be one of those stocks that polarizes the online sentiment. Some people believe that it's going to be a future trillion-dollar company, leading the way to AI and data analytics merging together, while other people do believe that Palantir is very overhyped, and at some point it's just going to deflate itself. The whole thing might be unsustainable. And this duality of perception kind of reminds me of Tesla a few years back, where there were a lot of people who were very bullish about Tesla and many people who were quite bearish as well. So as we approach Palantir's earnings, it's very essential to keep this in mind and to be prepared for the narratives that may emerge. I think that they're going to be polarized no matter what. The general expectation is that Palantir will slightly beat the revenue and earnings per share, but it's unlikely that these earnings are going to be much higher than what the previous quarters posted. The company has won several contracts in the meantime, and their impact on the bottom line should take some time to materialize. Now, we still expect a solid quarter overall, which aligns with the long-term buy and hold investment approach by most. The current market environment is relatively challenging, with a recent downgrade of the US economy triggering sell-offs across multiple stocks. Now, Palantir had a strong run, of course, but it's not immune to those changes in market sentiment. It's essential to consider that regardless of the positive earning outcomes, money managers might identify some aspects and to criticize them in order to justify a sell-off. So elements like stock-based compensation, performance comparison between public and private sectors, they can all become focal points for a pessimistic analysis. Investors should also be careful about external sources of overhyped opinions. And this is particularly true with Palantir. There's currently a lot of noise because it's one of the more volatile stocks and more emblematic stocks that has gone public over the past few years. So instead of trying to time the market, I think we should have a plan for the next few years, regardless of the market timing. So I think that the quick sell and re-entering in the short-term market movements might yield like some opportunities in the short term, but it's not going to go well in the long term. So holding on to some great companies in the long haul, it's very often far more rewarding. And in terms of great companies, I do put Palantir in this bunch. Because if we think about it, it's a company that is tech and is actually earning a net profit, or at least a gross profit. Well, gross profit for sure, and sometimes a net profit. So as Palantir's Q2 earnings approach, it's very essential to remember that the short-term market movements, like I said, can be manipulated and unpredictable. As long as we maintain a long-term investment outlook and that we're prepared for a potential market volatility, whatever the outcome is, these principles should save us from having heavy losses. So Palantir's future as either a dominant industry player or an overhyped stock will be determined by the company's performance over time rather than the current releases. So yes, it's going to have an uptick or a pullback depending on the Q2 results, but it's really going to be the compound results over the next few years that's going to give us a much clearer trend of where things are going to go. So when we consider the stock's recent run-up, there's a possibility for a sell-off following the earnings announcement. So even if the numbers are good, Wall Street may still highlight specific factors and then justify a profit taking. To navigate the potential scenario here, we should be well prepared and ignore the emotion and the emotional noise really to become even more critical during the market turbulence. So a knee-jerk reaction would be to sell or to buy when those news are released. I would say that we need to avoid those highly volatile moments and to maybe let things cool down for a few weeks before we try something new. Now, Palantir's Q2 earning will also offer some insights in the continued growth and the future potential of its operations. It might not deliver a great quarter, but solid performance can reaffirm the company's positive trajectory. So it's essential to acknowledge that the stock market is not always a rational place, and the sentiment can be swayed by multiple factors, which may cause movements outside of our expectations. But over the long term, the market tends to reflect a company's true color, its true value and performance. So in that sense, investors should maintain a long-term perspective and focus on the fundamentals of the company instead of the pure price action. If we look at the long-term price action of Palantir, we have to ask ourselves whether this company will have a place in the economy of tomorrow. Because we already know that Palantir will not be profitable for the next few years. This is already priced in. We know that Palantir is in a highly sophisticated area of the economy and that it aims to become an analytic board for the wealthiest entities on the planet. The true debate is whether Palantir itself can stand the test of time and to actually play this role, and if the market believes that it'll play this role. So Palantir fell by almost 80% from the peak of the share price, from around $35 down to $7.28. Much of it is due to the overall market trend, and the rest is caused by doubts on a company's growth potentials, as well as its business model to work with government agencies. I believe that Palantir has been testing its bottom for some time now, and that the downward slope finally stopped its progression over the past 6 months. Ever since, the price has been hovering between $7 and $8, but is definitely hesitant in going below 7. Does it mean that the stock will reach new highs very soon? That new recoveries will start immediately? I don't think so. On the other hand, I do believe that Palantir will have a place in the future and that significant changes will occur at some point. Given that it's been down by so much, the only logical scenario is a price recovery once the storm is behind us. This, however, hasn't happened just yet. Palantir Technologies is a software company specializing in providing big data analytics and management solutions to various industries, including finance, healthcare, and defense. The company's flagship product, Gotham, is a powerful platform helping organizations to make sense of their data by providing advanced data integration, analysis, and visualization capabilities. One of the key features of Palantir Gotham is the ability to integrate data from a wide variety of sources. The platform may work with structured and unstructured data, including text, images, and videos. It can handle data from multiple formats and languages. This makes Palantir the ideal solution for organizations with data spread across multiple systems, languages, departments, and formats. Palantir's solution is widely used by government and intelligence agencies as well as major financial institutions, consulting firms, and other organizations around the world. This is due to the platform's ability to help make sense of the data that they have and to identify patterns and trends or causalities that might otherwise be difficult to spot. As we look at the company's financials, something that is very noticeable for me is the positive gross margin. Above all else, this is a very good reminder to us that Palantir's core business model seems to work. It is true that the revenue has been growing slowly over the past few quarters, but the fact that the gross profit that is positive, suggests that the main issue now is the scalability and diversification of the operations. We have to remember that Palantir's revenue has been able to grow despite the fact that there is a de facto recession in many parts of the world, suggesting that its clients are relatively robust and resilient. The cash flow reports also suggest that despite having a net loss, Palantir can self-finance significant portions of its operations with positive free cash flow of its own at the end of each quarter since Q1 of 2021. This would mean that the pressure for Palantir to go through rounds of share dilutions can be relatively low, which is a very good thing for shareholders. Another significant aspect to consider would be the liabilities Palantir has on the books. They are very well controlled. So currently they are a little bit more than $900 million. This is normal considering the size of its businesses and the growth that it had over the past few years. I would say that Palantir has a decent chance to become something that we should invest in because there is around 34% of institutional ownership amongst the shareholders. This means that Palantir does have significant endorsement from money managers, but they're largely outnumbered by the retail shareholders, that there will be a significant chunk of people going in and out of the stock market based on market movements and short-term price actions. This also means that even though it might be good for investment, and I would highly recommend you to see it as an investment stock, beware of people who still hope to profit off the swings, and don't blink when small volatilities occur. One significant difference between the institutional and retails is their investment horizon. Institutional shareholders can afford to wait for sometimes decades before things blossom, whereas retail traders tend to go in and out. Another behavioral difference is how active they are in the governance. Institutional shareholders are more likely to vote on important matters and decisions, whereas the retail shareholders tend to not bother and to simply wait for things to happen in their favor before they cash out. So my recommendation for Palantir is to wait for the Q2 results to actually price in before we make any further investment decisions. With that being said, we can do a little bit of role playing here. If the results are disappointing, I personally think that the volatility as a result will be less significant than if they were good. I'm relatively comfortable with Palantir going down by a few percentages as a pullback and use it as an opportunity to bounce back later on. And any Q2 results will probably not affect the long-term outlook either.